What is up? What is going on, real estate investors? Welcome back to the show. Today's guest brings a powerful blend of corporate discipline, entrepreneurial grit, and long term vision that every investor can learn from. He started with a strong academic foundation, earning a BBA from University of Texas at Austin, and I got to say, Roll Tide. I'm an Alabama guy, and a master's in business from LaSalle University. From there, he spent 13 years with Chrysler Credit, moving 8 times. They gained a deep understanding of finance, operations, and scaling within a major organization. But where his story really takes off is in the 2000s when he stepped out and bet on himself, launching his own car dealership with in-house financing. What started as a single lot grew into 5 locations across Houston, Texas. After 11 years of building, scaling, and creating real value, he successfully exited the business, selling it to a friend who continues to thrive with it today. Not wanting to slow down, he transitioned into real estate development in 2012. And for the past 14 years, he's been building across both commercial and residential projects. Today, he's actively developing in markets like Mount Holly and Concord, North Carolina, as well as Prize, Virginia, with expansion into Wilmington on the horizon. This is a conversation about reinvention, scaling businesses the right way, and what it really takes to transition from operator to developer. Let's get into it. Brian, welcome to the Deal Makers Club.
Hey, thank you for the invite.
Yeah, no, it's phenomenal to have you here. So, you are definitely one of my most unique guests with corporate America. A total separate entrepreneur venture in the auto dealership, and then now, for the last few years, over a decade in real estate. That For you, how did it all start? Did you see yourself where you are today? Did you have that vision for your life? Say when you were your early 20s coming out of UT.
I had no idea. I was just kind of following what was supposed to be the right thing to do at the time, and that was, heck, I got out of high school and was in football, got a scholarship to Stephen F. Austin University there, and then transferred, got injured, transferred over to University of Texas, and I was just following, like, graduate from the biggest, best school you can, whatever I could get into at the time, which wasn't
Okay.
much coming out of high school. But after I had a couple years at a smaller school, moved on to UT and then got into their business department and got my bachelor in business administration, still not knowing anything what I wanted to do. I took a few interviews, and the Chrysler Credit job sounded like the best one at the time. And they said, where can you work? And I said, well, I'm open to anything. And they told me they were going to send me to Denver, Colorado, which was a dream for me. And
Okay.
I asked, could I go on one last little trip? And I ran over to Europe with a friend of mine and spent 6 weeks kind of getting a European education vacation, and then was ready to come back and start my career and just do what the teachers told me to do growing up. And my parents was just keep following the straight line, and you got to go to college, and then you got to get a career job.
Mm-hmm.
And I think the entrepreneur part it kicked in from a young age, but at Chrysler, I was not able to use it much. So I did my time there. I enjoyed it. I learned a lot of things about not only the car sales business, but the car finance business, which is far more lucrative, which I'll get into
Okay.
later. But that was my start, which just they plucked me out of Austin and sent me. They said Denver wasn't available anymore when I got back from Europe, and started me in Sacramento. And I ran through, in 13 years, I had to move 8 times. So about every year and a half, I was on the move to a new city. And
Wow.
that's when I first got into my first real estate play, because my mom had been a real estate broker while I was in high school. And I kind of liked
Mhm.
it. I did some odd jobs for her, handyman stuff growing up. And then Chrysler, when they move you, they'd give you, a package to move, and enough money that it amounted to probably a down payment on my first house. I think they gave you 10 or 12 or $15,000 just to make the move to another city. And so I plunked it down on a house in my hometown in the Woodlands, Texas, and a little $40,000 house that I put a renter in and I could handle the 15-year mortgage to build my equity quicker. So I got that rolling while I continued to work for Chrysler.
Okay.
Well, about 6 years later, I ended up leaving Chrysler to start my own car business. And I actually moved my young family from Miami into that small house in Texas. So that's how I got my start in the real estate part.
Okay. So really with the family now, was your wife from Texas or kind of met somewhere during those Chrysler years? How did that work? Because moving from Miami to Texas, that's a big transition for us, like the local culture and everything in between.
Well, that was my hometown. She was French. She was French Canadian, and I was living in Miami. And I met her at my last stop with Chrysler, and we ended up
Okay.
having kids pretty early. And that was the toughest decision of my life because I had a cushy job with Chrysler. I had made it to a level after 8 cities where I had a company car, I had a solid salary at the time, I had expense account, I had all the things they
Okay.
tell you in college you're trying to get to. And so I'm climbing that ladder, and I finally had kind of gotten there. And my ex had a 3-year-old at the time. And a year later, we had our first child together. And so I'm sitting with a 4-year-old and a 1-year-old going, do I get out now or do I, keep working for the man? And I think it's the best. It scared the heck out of me, but we packed up a U-Haul and I turned in my resignation and headed back to Texas and opened my first car lot in the year 2000.
Yeah, a lot of times they use the analogy, those golden handcuffs. When you climb the
Yeah.
corporate ladder and they dangle the promotion, the bonus, and just enough to keep you there so you won't
Yeah.
run off. And it really does take a leap of faith to go out and bet on yourself to start a business, to go down that entrepreneur track. And I think a lot of people, it's not for everybody. I'll tell you that, being an entrepreneur, I just retired last year, 20 years Air Force, but I had a second job, a side hustle for the last decade that my wife and I have been building, and it's not for the faint of heart. And for a lot of people, they think they have second guesses because they stay in corporate America, they're miserable, they hate their job, but they can't take that bet on themselves to get out of it and really take their skill set and build a business. So salute to you on making that leap. So I know I only can imagine the stories as used car salesman starting off all those years on building up and making it happen. I'll let you
Yeah.
walk us through it.
Well, this kind of applies to the real estate business that I got into 11 years later. And so I ran that car business in Houston, grew it from 1 location to 5 locations, ended up selling it to my best friend that lived right down the street from me. And he's still running it today. And I sold it to him back in 2012. So I think the big lesson there was keep your credit clean. That's for sure.
Okay.
Don't be afraid to jump out on your own when the time is right. That's for sure. But with the credit, keeping your credit history good, you're going to need those banking relationships if you want to scale anything. I mean, you can go out and save up all your last of your dollars and go buy 1 rent house and flip it. But if you're thinking bigger than that, you're going to need some capital. So, and I had a lot of,
Yes.
you have to take on some debt to make the money and you have to roll the dice a little bit. So, so I ran that 11 years, sold it to my friend, and started into the commercial real estate business. And my first project was taking over a guy that during the downturn in 2012, he had started some townhomes in Concord. Excuse me, built 7 of them. Okay. And I got with the broker, and we actually ended up buying out his property and building the rest of the 127 townhomes he had planned and had started building, and just went bankrupt on the deal. So I jumped in there with no real estate experience other than my couple rent house properties and started learning the game on the fly for the most part. And we built those out. I took that money. I put some of that into the land right next to it, which was in a real hot spot in Concord, North Carolina. It's only a mile from the Charlotte Motor Speedway, and it's about a half a mile from the Red Bull new facility and the Lilly Corporation. So I'm right in the middle, and I I got that first project done. I bought the land next to it, flipped it to an apartment builder because I wasn't big enough to try to bite that one off at that time. But just to give you some scale, he bought that from me for $2 million and spent $12 million building 360 apartments. He sold it a year and a half later for $52 million. So that kind of shows you how these things can amp up if you start on a ground level project. So I've evolved a little bit. I was buying land, building, and selling. And so when I flipped the land to him, I built a storage unit building, air conditioned, 3 stories right in the middle of town. A couple doctor's office buildings over the next couple of years, sold both of those. And I'm left with 9 acres right in the middle of Concord, right in this hot spot of growth that, hey, I'm just going to either wait or somebody's going to buy it. But I'm kind of phasing out of building anything. I'm just going to buy 1031 what I sell into some more land, get it site ready, and either sell it to a residential home builder or a commercial builder. But I don't want to build anymore. I just want to play the land game from here on out. Landman. Yeah.
Landman. Hey, that's a great place to be. And I talk to so many investors that, they come up, they've cut their teeth in different areas and put in the sweat equity. And it's like, hey, now it's 1031 into something passive, 1031 into something that's easy, where now I can reap the benefits of, all the hard work that I put into it. And now you're able to leverage that knowledge over the last couple of decades in business and in real estate investing. Now that you can make a couple $1 million from just being able to see the deal and lean on your experience to see the land and what's possible, that most people, they just drive by it every day and don't have a clue on how they can monetize it.
Yeah. You can do a lot of your own homework these days too. So I'd encourage, if you're into whatever your part of real estate you're into, just study. Get on your computer, get on your chat GPT and say, hey, look, I've done this a few times recently and I'm new to that game like most people. So I get on chat GPT and I said, all right, there's 12 acres right up the street. They're selling it for $1.5 million. Ballparking, I'd have to do about $500,000 worth of site work to get the water and the roads in there and the sewer. Blah, 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 blah. So I'm into it this much. What can how many house lots could I get out of this, or condo units or commercial buildings? What could I do with that property? And then what could I, expect to sell it for? So I think there's a big leap in making money by grabbing the land, getting it site ready, and then selling it. It's so much easier than going through with the rest of the headache. Now you need a little time because you got to do permitting and get with your local county and cities and that kind of thing, but it's far more lucrative. So if you want to just go out in the middle of wherever is kind of a hot part of your town, buy 10 acres, put a sewer line in there, put some roads in there. They can be gravel roads. Spend a few bucks on it. Waiting game, start applying for your permitting. And then if you get it approved for, say, 25 house lots on 10 acres, then you just list it. Okay. Or you go to one of the big players out there, like the home builders, Ryan Homes, or some of those that are out there, and you sell. I've done that a couple of times. You sell that project. Okay, I got it site ready and pad ready for you. Come on in and build your 25 homes. I'm out. And they cut you a check and you go on your way and do the next one by 1031.
What have you found with the 1031? I know for most listeners should know by now that we talk a lot about 1031, but what was the big game changer for you with the 1031 on how you leveraged it to build wealth?
Well, you have to, it works great as you're building wealth. Great. You're pushing that can down the road some, but you're able to use your capital. I guess it's comparative to like your 401ks. You're getting access to your own money or your own profits without having to turn around and pay taxes on it the next year. So you got to roll it all into something of equal or greater value is the kicker. So you can't go buy something for half of what you sold it for and put the rest in your pocket. It's all got to be in the 1031 thing.
No, that's a great analogy. I haven't heard that with the comparison of 401ks, but you're exactly right. hey, you're deferring those capital gains and letting your money grow for you all along
Yeah.
the way. And really in a different asset class than most, I would say, professionals that gravitate where you're only really with the 401ks, you're limited to really just stocks and bonds,
Right.
unfortunately. So with the real estate, what do you think was the biggest lesson that you took from the car owner business that brought over to real estate that you think really translated and really helped kind of accelerate in that area?
I'd probably say what I touched on earlier about the just keeping your credit history perfect, keeping your banking relationships as good as you can. I mean, get out and find new sources of banking. And if you have to, when you're first starting out, hey, I didn't get whatever, call it today, I'm paying 6% on my money. Back then, heck, I was having to pay 12 or 13, not because rates were higher, because I was a higher risk coming out, being
Mm-hmm.
a beginner. So once you get that stuff built up, um, the credit and the banking relationships, you can just move a lot faster if you have capital. If you've got to save up for every house you want to flip out of your own pocket, that's going to take forever.
Yeah, no, I think that's the big thing. Credit is huge across the board. And I tell a lot of investors is like, a lot of people have I would say a risk aversion when it comes to hard money. I'm like, hey, if you can pay 12, 13% and you're still profitable, you're still gonna make money after you project all your expenses and the whole period, then hey, it's a necessary evil, especially if you don't have a track record with being able to do that. But no,
Yeah.
I agree 100% on that side. Kind of peeling back, with the development side or real estate and kind of making that transition into it. Have you looked at partnerships, or has that been a part of the journey at all, or have you kind of been that solo investor?
I am in a partnership on a few of my properties currently, and that happens to be with the my best friend who bought my car business out. So I
Ah,
had,
okay.
yeah, and you might want to interview him next. He's quite the character, and he's done real well in his real estate holdings.
Okay.
Um, so we've done a few projects together, but he's done quite a bit of real estate on his own, as have I. So yeah, and I don't know how educated some of your viewers are on what's called a JV partnership, where if you hold some land, so go out and buy that 10 acres we were exampling earlier and get a JV partner, meaning somebody comes in that has the capital and wants to do the building, and you just donate your land as whatever that values out to be. So if your land is worth 20% of the overall project,
Hmm.
you're a 20% partner, and then you can go about it that way, so you don't have to use much of your capital in that kind of situation. And if somebody's
Yeah,
building some
no.
of these bigger projects, like an apartment complex or a big townhouse or a big commercial, and you got 20% of it, that's 20%, for as long as until they decide to sell it, or you just lease it out at that 20% to yourself.
Yeah, no, I think you bring up a great point, especially like on the land side. It's like that you're only limited by how creative you can be and what
Yeah.
you can bring in regards to terms, the partnerships, and putting deals together. And I think that's one of the big things. With your experience, what's been, I would say, the best project that you've worked on over the years that you've seen that you point to, like, oh, that was a great project, or it may have been a great product that ended up turning out on that piece of land.
I would say the condos, the residential townhouses and condos, because I would put in the class of doing something commercial, meaning say a 10,000 square foot building that's going to be a Verizon store or something like that.
Mhm.
That's good on the commercial side. On the residential side, it's good to sell some single family homes. But if you can take those same 10 acres I've been using as an example and put townhomes on there, your profit margin is far higher because you're using a lot less of your acreage to build extra units. So, and you're sharing
Okay.
common walls. It cuts down on your construction costs. So I'm a big advocate for condos and townhouses.
Okay. No, that makes perfect sense with the kind of the best use case for
Yeah.
the land and maximizing that. Do you see, of course, with all the AI changes, Charlotte's a very hot market. in there. Are you seeing things change in the market, right now? Because I know a lot of the things right now where we see the ADUs, the alternative dwelling units, where your municipalities are trying to get after the affordability and they're letting you build in your backyard now. Are you seeing
Yeah,
the laws change from a developer standpoint where they're trying to allow you to go faster and maybe build more there just because of the shortage of affordable housing and the lack of housing that we had? And that's really a nationwide problem.
it is. It is. Housing in general, it's just rent rate. Rent rates have gone through the ceiling, and home ownership's tough to do these days. So I think where I see the trend going now, and I think we're going to do that on this 9 acres I told you about in Concord earlier, is
Okay.
multi-use, and that's obviously it's commercial on the bottom and some residential on top of it. And every city has some setup like that, and it's really lacking in that area. You've got to go a pretty good
Mm.
distance to have multiple restaurants in the same structure with residential on top. So you're kind of killing two birds with one stone, so to speak, because you're selling these residential real estate pieces on top or renting them. You could go about it either way, and same with the commercial on the bottom. So it's a very efficient use of your land cost.
No, most definitely. I think that's one of the things that when you look at real estate, that a lot of times people they don't understand the permitting process, all the soft costs that go up front before you can start going vertical. And I think for a lot of people, it kind of keeps out a lot of the aspiring real estate investors. Where I know for me, it kind of gravitate to the value add, where you can go in, make improvements, and generate cash flow in a short amount of time, just because there's a lot of cost up front with getting the permitting, bringing in the sewer, the water, and then being able to get bill ready. That I think a lot of times for the non traditional investor, they can't get there. So really for you, was that always the vision when you were leaving the car industry and sold off the car lot? Was it, did you know right then that, hey, I'm going into land development specifically? That was going to be your jam in real estate?
Actually, no. I was 47 years old when that happened, and went through a divorce thinking I was retired. I had made enough money in the car business where I was good. And going through the divorce, as well as just getting bored with not, I can't do the retired thing totally. So
Okay.
I figured I'd just jump back in, get my feet wet on that first condo project. And when I got a taste of it, I was like, wow, this is fun. This is some, and you create something. I didn't even realize that I was buying, building, buying, and selling. And I got to the end of that Concord project, which now we're waiting on the crown jewel will be this 9 acres, but it's surrounded by commercial and residential that I built. And I was riding through there with a friend, and they, years later, after all those townhomes and these buildings went in, and they go, look here, you created this entire community where all these people are living and putting their kids on the school bus and going shopping. And it never dawned on me. I was like, well, that's kind of cool. You've done some good in
Right.
the world, I guess, besides just chasing the almighty buck.
Yeah, no, that's great, and I think that's the thing that I hear a lot of people is like, hey, yep, you got to do something. You only can play so much golf. You only can sit on the couch. You only can travel so much. And I think that's been the one thing that I think a lot of people that I talk to that's been really successful in real estate is like, hey, what's the next thing? What's their next passion? That project that they're really passionate about, that they're going to move that energy that's going to fulfill them. Because it's the game of being an entrepreneur and the challenges and overcoming those challenges that it can become addictive. And you look up, and it's like, man, how am I going to fill this void now? I don't own any real estate, or it's all passive, and I don't have to solve problems anymore. So what does that kind of go to kind of as you're looking, like, hey, I'm gonna just do this forever, or kind of what's that next thing you're thinking about?
Well, funny you should ask because it's just kind of developed recently, but I've got a couple of my kids that have just recently become interested in, not working their butts off in some restaurant or bar job or manual labor.
Okay.
They're out of college, and they've kind of been looking at what I've done, and it's nice to have the knowledge now. Like I've told I mentor a few younger guys that I know, that are just starting in business or real estate or whatever. And, you know, it's nice to see somebody want to get into something that you can help them with. And I've accumulated all this knowledge. Now, you know, I'm not yet running short on energy, but, you know, I'd love to turn all this knowledge over to people that can use it. So you can, you know, you don't have to reinvent the wheel. Just study what other people have done and roll with it.
Yeah, no, I think that's great. We're giving back. And that's one of the things that I think a lot of times people take for granted and just don't realize. Like a lot of real estate investors, I haven't met a real estate investor that wasn't forthcoming and like, hey, if I can help you or if I can add value, if you got a question, run it by me, you know, and go through. But I think they said a closed mouth doesn't get fed and ask me. So I think that's really good with the kids because I see a lot of investors where it's like, hey, I have to go 1031 into, you know, a triple net lease where because my kids aren't involved or I don't have it, they can't step into it and manage, you know, the portfolio I built. And now I'm trying to figure out how do I exit real estate in a way where I kind of can still defer taxes, you know, but not be hands-on a daily basis type of setup. Just because, you know, you do your family a disservice if they can't step in and all the wealth is tied up in real estate and they can't manage real estate. Like, okay, well now you just created a big problem for them, and I think that's really cool that they're gravitating and stepping in and filling in those shoes and really kind of taking the baton, if you will.
Wow, thank you.
No, so I think you know you talk a bit about the mentorship. What does that kind of look like? You know, was that something you did you initiate or did they initiate?
A little of both. It's just guys I've met along the way over the last decade or two. And, you know, they'll just call me from time to time and say, I've run into this or that, you know, just run things by me, so to speak, kind of like a coach, I guess. And I get satisfaction out of it. And I watch these guys, you know, and some of them have young families like I had 20 years ago. You know, it's kind of neat to give back. And my next move after all of this and getting my kids involved to some extent, hopefully, would be philanthropy. So this is just a form of my time being the philanthropy part. And hopefully later on, I'll be able to do more of that.
Yeah, no, I think that's great. And the charitable part is one that a lot of time gets overlooked. And so I think that's the big one. You know, really kind of looking over the real estate. What do you think? Do you miss the car business at all?
Not at all. Not at all. And I couldn't the day I got out. I just had to sell. It was time. But like I said, this is something. It's kind of like golf and tennis are for older people. You can't go on working a manual labor job or sitting in a cubicle when you're 70, 80 years old. But heck, you can certainly be doing some real estate transactions. There's just a little mental work like reading the newspaper.
Yep, no, 100%. And I think that at the end of the day, having that fulfillment and being able to do something that you love, do that you really can't even put a price tag on it. You know, for me, it's like I look at real estate deals for free. That'd be something I can spend time. And the bonus is the icing on the cake. Like, of course, you can make money at the same time, and you can help people along the way and provide housing. You know, provide real estate for businesses and things that are going to give back to the community and create jobs at the end of the day. Uh, Salute to you. You brought up the mentoring side of it. You know, kind of as we wrap up, looking back, for maybe that aspired 18-year-old or even someone that maybe just started their corporate career and kind of thinking about maybe doing something in real estate or just in entrepreneurship and journey. What would in general, what would be that word of advice or piece of advice from your experience you would give to them?
I would say get a few bucks in the bank, but try to get out on your own as soon as you possibly can. I mean, start whatever. I've got kids that are doing that very thing right now, and now they're maturing, and you need to learn a little bit about the business world, and then you're ready. So you got to save your cash, keep your credit good, like I said, develop some banking relationships. Buy a couple things and pay them off so you build your credit up there. And then when you're ready to start making moves in real estate, just counsel with people you trust and that have done well themselves and give it a shot.
Heck yeah. No, I love it. I know it. Sage advice, sage wisdom, words of wisdom for you guys listening out there. Well, Brian, it has been great. I really appreciate you taking the time and
Yes,
bringing your
sir.
words of wisdom and experience and sharing with the audience. And so we'd love to hear more stories in the future. Some of those deals you're doing with the family, I think
Yeah,
is awesome.
great.
And we'll
Sure.
definitely stay connected. And we'll talk soon. For those listening in, that was a powerful conversation with Brian. What stands out most to me is the ability to evolve, moving from corporate America to building and scaling a multi-location business to successfully exiting and then stepping into real estate development with a long-term vision. You know, there's a clear pattern: disciplined execution, smart risk taking, knowing when to pivot into the next opportunity. If you're listening and thinking about your own transition, whether that's leaving a career, scaling a business, or repositioning your capital into real estate, this is exactly the kind of blueprint to study. Appreciate you sharing your story and the lessons behind it, Brian. For everyone tuning in, if you got value from this episode, make sure to subscribe, share it with someone in your network, and keep building purpose. I'll see you on the next episode.